The year 2022 has been a pretty bad one for the crypto community. The currencies have failed to perform up to people's expectations, and not only that, major contributors, firms and coins have massively failed and filed for bankruptcy. It all started with Terra Luna, and we all know the disastrous ending of Sam Bankman-Fried and his beloved FTX. Weeks after the FTX debacle, BlockFi filed for Chapter 11 bankruptcy as well, as it blocked off its users' withdrawals just hours after they tweeted that the withdrawals won't be closed. Before we start the video, make sure you hit the subscribe button and hit the notifications bell so you know exactly when new content is being released. Also, let us know your questions and thoughts below on any video topics you want us to cover. Now, without further ado, let's head into the video. This crazy set of events would make anyone question the authenticity and credibility of such exchanges and platforms. If you did not manage to take your assets off your platform, then I'm sorry to tell you, you will have a long and agonizing wait. The good thing is, unlike FTX, BlockFi has filed for Chapter 11 bankruptcy, where they will be halting any economic activity and will be blocking all sorts of transactions and will try to find a way to return your money. The current deficit stands at $3.1 billion, with the top creditor Ancora Trust investing over $700 million in the company. Not to forget that early this year, BlockFi was hanging on thin air and was about to default on a loan when it was saved by a $400 million loan given to it by none other than Sam Bankman-Fried. Now, when BlockFi has gone down, it claims that some companies have defaulted on the loans given to them. Can you guess the companies? Yep, you guessed them right. FTX and Alameda have defaulted on $1 billion worth of loans. The story revolves around FTX and Sam Bankman-Fried, as BlockFi claims the company has taken them down with them. To understand the complete saga, let's deep dive into the fishy world of crypto and BlockFi. BlockFi was a regular cryptocurrency trading exchange, but it had some remarkable benefits for the average user, making anyone move to the platform. It had great returns, awesome paybacks, and discounts on its credit card. The pick of them was the return they promised on your crypto holdings. During the tough economic times in 2020, when the Federal Reserve notified the banks to take down short-term interest to zero, and overall interest rates were lowered too, BlockFi was the only one offering 8% interest on stablecoins and 4% interest on other crypto coins. This forced people to get into crypto, buy lots of stablecoins such as USDT, and earn lots of interest. However, the loss in value of USDT in June halted the rise of BlockFi, not to forget the failure of Terra Luna as well. Now, if you think cryptocurrencies have some magical way of earning money, then you are completely wrong, I'm afraid. There's always has to be a solid basis for any scheme to come. If you closely look at the foundations of Terra Luna, it was just a Ponzi scheme, and it had to fail one day. Similar was the case with BlockFi. Although they were giving great interest rates, there was no solid backing in the form of collateral for them. When you take a loan from a car or a house from a bank, the bank has something in collateral, which is in the form of the product you now own, and they have full right to take it back from you, which, if not fully, then partially covers the loss that they've suffered. Moreover, the banking loan system has been under practice for years and is made foolproof with the help of top investors and bankers. This was not the case for BlockFi. Although BlockFi did not directly invest in USDT or Terra Luna, they were massively affected by their failure. To compensate for such high interest rates, BlockFi had to take on massive risks, and they did so by investing in crypto companies like 3 Arrows Capital, which would take on their money to invest in high risk and high value assets. 3 Arrows Capital invested heavily in USDT, and when that had a dip, they defaulted, and in turn caused massive insolvency problems for BlockFi as well, as they saw a deficit of $400 million. At this very moment, FTX stepped up to save them. FTX was able to put together and deliver a package of loans worth up to $400 million. According to the document filed in court, As part of the deal, FTX retained the right to buy BlockFi at any time before July 2023. Dealings with FTX and Alameda Research significantly undermined BlockFi's stability, despite the fact that FTX's rescue package did originally help to prop up BlockFi. BlockFi sought to execute margin calls and loan recalls on its Alameda exposure as Alameda's unraveling progressed and FTX got closer to filing for bankruptcy. Alameda may be a separate entity and company, but Sam Bankman-Fried closely controlled it, and BlockFi lent $680 million to them. In the end, however, Alameda defaulted on about $680 million in collateralized loans from BlockFi. The court document said that the recovery on which is unclear. During the Voyager and Celsius meltdowns, BlockFi was finally pushed into doing what it had previously avoided doing. BlockFi halted client withdrawals on November the 11th, the same day FTX filed for bankruptcy protection. BlockFi eventually blamed FTX and Alameda and claimed that they would not have frozen their withdrawals if this billion-dollar deficit had not come. Now, with this condition, it remains uncertain when the users can expect their money back, and whether BlockFi would even allow that or just declare bankruptcy like FTX did. However, a ray of light exists as Alameda holds a 7.6% share of Robinhood, a company that currently has a market cap of $8.8 billion. So, if we go by these numbers, Alameda currently has $700 million, which is enough to cover up the loans they took from BlockFi. Since BlockFi has gone to court and declared Chapter 11 bankruptcy, the court will ask Alameda to sell off its shares and pay off their loan immediately. This may help BlockFi to stabilize and open proceedings. Even if they do pay their loan, there would be countless other hedge funds who would have defaulted over their loans, like Three Arrows Capital, and there is hardly any chance of getting a penny back from such companies. Nevertheless, there is one certainty. Since these cryptocurrency exchanges and wallet providers don't back up their services, it's becoming harder to tell which ones to actually trust. Well, that just brings us to the end of this video. If you guys did enjoy this video and found it helpful, please show your support by hitting the thumbs up button, subscribing to our channel and turning on the notifications bell so you can keep up to date with new content releases. Feel free to let us know your thoughts on the BlockFi bankruptcy and what you think about your favorite crypto platform now.